In this video, I want to go over Apple stock. I'm taking a look at the setup, which is on our weekly watch list video, but I want to be grabbing calls and next week calls. So in this video, I want to go in depth on what contract that I am looking at for a weekly swing. So I'll be going over the contract that I'm looking at to buy in right at market open. This is a play that I want to be buying in right at market open. So in this video, I want to go over the psychological analysis to help you guys be really prepared for this play. So this is going to be a nice options swing trade play for tomorrow and for the rest of the week. Subscribe with notifications on. Our next goal is 6,000, so would really appreciate a subscribe. Make sure to leave a like. Also watch yesterday's video. We went in very in depth on the weekly watch list and we had a lot of great plays. Follow me on Twitter and let's get started. So first, just a quick update on SPY before I talk about Apple. SPY looks extremely bullish. I just want to keep you guys reminded that SPY looks extremely bullish, and as we go on with Apple also looks bullish, but the overall sentiment for this week is bullish, as I alerted on Twitter. The overall sentiment is bullish. There's really no reason to be bearish this week. I mean, just look at the psychological analysis. The analysis, the chart looks absolutely beautiful. The only thing that can really mess up is if we have some black swan event or some bad news happening. The chart and the technical analysis is screaming bullish for the SPY, especially this close on the daily time frame. Look at this close. Okay, then we have a gap to the upside over here. So we have a gap to the upside being our price target. And as we talk about Apple, we also talk about Apple and how Apple also has a very nice gap to the upside. Now let's talk about Apple. So we're taking a look at Apple. Bigger picture looks interesting. We're overall in a kind of like a bullish trend or a choppy trend on the daily, on the bigger time frame. But we're taking a look at the daily time frame. We have to zoom in a lot over here. So we kind of got this pullback going on with Apple. We got this pullback, and then we have this descending triangle, and then we have these two gaps. So we could either be bearish if we close below, or we could be bullish if we break out to the upside. So this is what I'm taking a look at. Now take a look at the daily time frame. I really like this psychological analysis for Apple. Take a look at the past candles. Okay, just zoom in. Let's zoom in all the way here. Okay, 1, 2, 3, 4, 5, 6. Look at this price action. So what you have to do is go to tradingview.com and chart these levels out. Okay, do the technical analysis with me so you guys can really understand what I am taking a look at, and you can really learn instead of just relying on me. So we could see these candles and just look at this price action going on how we bounce. So this is going to be our stop loss area. If we close below on the daily time frame below 177, this is going to be our stop loss, because this tells us that we have more room to the downside because we have broken the trend. Okay, so this is going to be then our price target, which is the gap down below. Now the probability of happening is a lot lower to the downside, and that is why I am taking a look at a bullish scenario and for calls. So we have SPY, which I talked about earlier in this video. SPY is looking bullish, but then take a look at this close and why this close was very bullish today. We're taking a look at this candle where we closed right at the level of resistance. So the previous closes that we came all the way back down. So we touched this level of resistance, but we came all the way back down. But today we closed right at the level of resistance. So that is bullish because now we are breaking that trend and that consolidation period on the daily time frame. So we're taking a look at that. Now let's take a look at our price target. So I want to buy in calls right at market open because we're also up a little bit after hours, but right when we're going to open, I'm expecting a breakout to happen, because especially the first 5 minutes and the first 15 minutes of market open, that is when we have the most momentum and the most volume for stock, and that is when we really get a breakout, which is right around market open, because that is when we get the most price action for a stock. So this is going to be our price target, 187. Let's color this yellow. This is our price target, 187. Our first price target, conservative price target, if you're looking at weekly calls, so literally just buying in weekly calls and you want to do a really just quick in and out, this is going to be our first conservative price target, which is 182, and I really think we can hit this level tomorrow right at open around. And then next we have 187. So these are our price targets. We talked about the stop loss, we talked about the entry tomorrow right at market open. Now let's dive deep into the contract that I'm looking at. So I went to options profit calculator, I typed in Apple, and I'm taking a look at a next week expiration, August 25th, and I'm taking a look at the money, so around 390. 180 is also good, just depends on what you're taking a look at. I'm taking a look at 180 strike right at market open, around $200, 230. It might be around 250 when the market opens, because I'm guessing we might have some sort of a gap up for Apple. So I'm taking a look at this. Pretty cheap, probably just going to buy in one, that's all, nothing crazy, just one contract. I'm taking a look, we have 182 as our first price target and then 187, so I could add in here, which is our second price target. So 187, that's around a 200% gain. If Apple stock hits 187 by August 25th. But I want to be very, very conservative, okay? My very, very conservative price target, my second conservative price target is 185. So around 185, that's around 100%. So this is what I'm taking a look at, a conservative 100% gain for Apple. Okay, just one contract. This is really it, and the contract that I am taking a look at. And then our stop loss would be around 177. Okay, so 177. So that would be around a 70% loss, a 60% loss. If we weight it all out, it would be around a 100% loss. So essentially, our risk, if we take a look at this at a closer look, okay, our price target, our main price target is 187, and let's just say that we hold to the expiration date. Our risk would be 1 to 2, so we're losing 100%, but we would be gaining 200%. So our risk is 1, 2. We're risking 1 to make 2. If you guys are understanding what I'm saying, but overall, that is really it. That is the risk to reward. Really important to analyze the risk. I'm only just going to be playing one contract, putting in like $300, nothing crazy. 100% gain, that would be nice, quick in and out. So that is really the quick trade that I am looking at. Hope you guys enjoy this video. Subscribe with notifications on, and see you guys tomorrow. I'm really excited right at market open. I'll keep you guys updated on Twitter.